let me say this again. The NFP data came out today. I'm speaking about you now. It's 7:30 p.m. South African time. NFP data came out today. The forecast was 106K, but we only got 73,000. That's a terrible, that's a very cool NFP number. And this number says the Fed needs to start considering cutting rates because if they don't cut rates, the labor data might go worse. And remember, the reason why they have not cut rates as yet is because of the labor data. The labor data was stable, it was looking good. So that alone has kept the interest rate the same and has kept the US economy striving. So once you start seeing these bad numbers, the Fed has to start considering cutting rates. But not only, that's not only about the number that came out today. Look at the revision. They revised last month data. They revised it from 143,000 to 14K. And remember, during the same time, on a Thursday, we got ADP data, and that ADP data, it was terrible. Had a very good indication of a terrible jobs data. It was a negative 33K, and with a negative 33K of the ADP number, that July number, I expected also a terrible NFP data, but the NFP data that came was very good, that kept interest rate the same. But today, NFP data come back again. They revised from 146,000 to 14,000 number. That's a very terrible NFP number. Um, oh man, that's a very terrible NFP number. So here's an NFP number, the one that I highlighted. The forecast was 106. We only got 73. That's very, very bad for the dollar. But we might start to see the Feds starting to change the tone to start looking for rate cuts because of this jobs data. Also, the revision moved from 147K to 14,000. Ever since they're streaming, this is the worst NFP data. So we're gonna start to price in back for rate cuts again. We're gonna start to price in for rate cuts again. The NFP data is bad, so meaning the jobs data is bad. So I'm really, really looking forward to unemployment. What was an unemployment rate? The unemployment rate stayed at 4.2, but I'm really looking forward to next month unemployment rate, and then unemployment claims. Let's see the unemployment claims, but this data is not good at all. Unemployment claims on the 31st, we got a slightly lower numbers. So the numbers are slightly lower. So we are not in a good space in terms of the jobs data. But rest assured, it was very interesting for me. It's very good. I'm gonna start to price in for rate cuts. I'm starting to price in for rate cuts. I'm gonna start to look for position on the rate cut side, more especially for the dollar. We might have gotten a good rally to the upside to start getting lower prices, and the rally might, as I said before, the rally was caused by the interest rate was caused by the interest rate decision between China, I mean EU and USA that gave the dollar, that gave the dollar a rally. But look at this now. You look at this, the market have lost everything possible. We have lost all the bullishness that was in the market. We lost, who is the NFP? I want to show you this. I didn't want to take long here. Where is NFP, trend, GDP, PMI, COT, retail sale, GDP, PMI, unemployment, employment rate, interest rate. So you look at an interest rate, it's a -1. We're starting to price in for that. CPI -1. So we're starting to see bears. But what it, I don't know how to explain this, how to put it in words. We have lost all the bullishness that was there in the market in terms of forex pairs. Also, NASDAQ has just dipped lower to go into the neutral reading after today's NFP number. I think today's NFP number was a tester in the market. People did, so we, investors, and they didn't price in for such a number. They didn't price in for such a number. They did not price in for such a terrible number. So if we were to look at, we are all neutral. Look at Bitcoin. Look at there's something wrong here. There is something wrong here. Look at NASDAQ. Look at Dow Jones. We all dipped back, back inside. So this NFP data is not as good as I wanted. It's a terrible data. And let's look at the US heat map, the economic heat map, just to show you that we are still gonna start to price in for rate cuts as the NFP number or the jobs data. It's terrible. It's a very terrible jobs data. Look at that. Yesterday we were very bullish on it, but now we're back to neutral. Jobs opening bearish, GDP bearish. I mean, when PMI. So the one that are holding it together is just unemployment rate is neutral. We didn't get any beating. NFP, this it's a terrible beating. So we might start to prepare to price in for rate cuts for the year. And I think I'll be looking for rate cuts for the year. But with that being said, there's no bullishness, there's nothing, but there is only bearishness that I'm looking for. And just to quickly just show you um, the shorts that I'll be looking for going into next week. Also on the echo, there is possibility. I just sometimes do not love looking at only the macroeconomics without looking at the trend line or the trend structure. Look at this, what this thing is doing. But anyway, so the bearishness that I'm looking for, the bearishness that I'm looking for, it's here. Bitcoin has lost a lot of bulls, but because we are going to start to move away from risk on our side and move into cutting rates. And when that is properly priced in, we're going to start to look for buys. But I'm still looking for longs on Bitcoin as we are coming lower. As we are coming lower, I am still looking for longs on Bitcoin. Um, if this low fails, it's fine if Bitcoin can retrace and look for longs there. If that fails, the other position that I can look for, it's that low as well. So there is this position, that position, and the lower position, and all this position for longs will give you a good risk to reward in terms of Bitcoin. And on the forex pairs, I'm very interested in GU short, and I think I've spoken about this on the live over and over again, on the stream over and over again. If it reaches back to the upside, I'm gonna look for shorts. AUDUSD, I'm gonna contemplate if it. Oh, come on! If it reaches back to the upside, hold resistance, I am gonna look for longs as well, for shorts as well. Um, so this one, USDCHF. What's interesting about it, I think it will be nice for me to show you. So with an echo, what's this? With an echo top setup settings, where you only look at macroeconomics, you don't look at trend, you only look at macroeconomics, don't look at trend, you don't look at seasonality. It just purely focuses on trend macroeconomics without looking at any other technical thing. That would have been a very good trade because it's showing a bit of bearishness in it. So It looks like the dollar will be bearish against the Swiss franc, and that move would be a move that I'll be looking for. But there is a possibility that I will look for a move short as well. If we retrace back to the upside, I think I'm gonna look for shorts on that price section to look for short there. If we retrace back to the upside, I win, and then my target will be this low. So I'm gonna target a 1:3, something like that. In fact, that is quite high. Yeah, something like this. If it comes back again for a retest, I'm gonna look for shorts there. GU, I've spoken about this. EU, I'm just gonna sit outside on here. I've not decided what I want to do with it. But the rest are purely just neutral. There's no technical that I'm looking for. But one thing which I wanted to show and speak about right now, it's the echo. If you go to the echo, if you go to the echo and you look at USDCHF, it is bearish. So USDCHF under it's bearish, USDJPY it's bearish. So let's just look at the technicals between USDCHF and USDJPY. Even though it's not a conclusive bearishness, however, it will be interesting to see um, where we are standing technically. So as I spoke about this now, technically, if we get a good move again, a good push to the upside, I think I will a good push to the upside and a rejection again immediately. I will look for shorts as much as it's giving bearishness, but I'm not gonna be too aggressive. I love that it held that resistant area. And then USDCAD as well, showing bearishness. I don't know if it's looking at this as a resistant area, but I've already taken profit there, which I love. Other than that, those are the pairs that I'm looking for. For gold, I think with NFP today, where's gold? With NFP today, we saw gold gaining strength quite a while today, with a bit of uncertainty. They're going to get rate cards, regained a lot of uh, momentum that it lost lately. And you're looking at gold being up 1.7% for the day. And if I speak of indices, it's a bloodbath. We are down 1.9% on indices after NFP data. You will expect that NFP goes to the upside because you are looking at possible rate cuts. But the fear now with, I think this is important. I think you should note this. So the fear now with why the dollar is moving lower and indices are moving lower. It's because of um, there is what we call soft landing. So if you get such a terrible jobs data and the revised are terrible, it it's just telling the market that the Feds might be losing the plot with the so-called soft landing. We might start to see the market losing a lot of jobs data, and then we start to see recession coming through to the market. Yes, recession for me, it's out of the picture for now, but with NFP data, you'll think because the NFP data was good, you were gonna get a Nasdaq to the upside. However, I think NFP was good for Nasdaq, but for indices, however, you didn't get such a thing, and this is purely because you look at the jobs data, it's terrible. For companies to strive and to keep spending in the market, you need jobs. So therefore, if people are losing a lot of jobs, then who's gonna spend? And that it may result in deflation, and deflation is not something that the market wants, or something that there might not be a soft landing. So that is why you see Nasdaq pushing back to the upside. Already for the day, Nasdaq is down 2%, which is a very terrible number. You look at Dow Jones also is down 1.7%. I mean, that's S&P 500. Dow Jones, let's see, your net's down 1.4%. to that area I've been looking for a while. Russell, it's down 2.1%. So this jobs data is a very big thing in the market, and I think we are selling off because of the jobs data. It's very worrying to the market, and we're just closing off on NASDAQ. That's why maybe that is why, and I think I've explained it properly why you see the dollar rallying to the downside and NASDAQ and everything following suit. It's just purely because of the jobs data. But other than that, I've explained everything that I wanted to explain. I think I loved how I explained it. I think now you understand why you're seeing such a move after NFP data, for which it's a good thing to note. So thank you so much, guys. I truly appreciate that. And do not forget to like and subscribe. Let's get to 100 subscribers. I might have a giveaway as we get to 100 subscribers. Our partner broker Tigmal. So you can trade with Tigmal, but make sure that you do your due diligence and make sure that they are really affiliated in your country and registered properly in your own country that you are trading from. And they are giving a $30 free trading account when you join them. Click the link in the description and join Tigmal. And that, thank you so much, guys. I truly appreciate all of you. I truly appreciate all of you.